So up peeps, we are traders. Today we are going to be discussing the two types of market analysis. In my last video, I discussed about the basics of forex trading, the terms we use in forex trading, leverage, margin, all like that. But today, I'm going to be, I'm going to discuss the two types of market analysis, and I'm going to go to my chart and show us how it is. Now, number one, we have technical analysis and we have fundamental analysis. These are the two major types of analysis when it comes to forex trading. Now, when we're talking about technical analysis is based on studying price movement based on past action of trend. You know, action repeats itself when it comes to forex market. And in technical analysis, we are going to be using charts. We are going to be using our chart majorly. They will tell you there are different kinds of charts. We have line charts, we have bar charts, and all. But here we are going to be using only our candlestick chart, Japanese candlestick chart. So we have fundamental analysis. When we're talking about fundamental analysis, we are going to be talking about analyzing economic data, social and political forces that affect the supply and demand of an asset. Or if you are used to the term called economics, we're talking about macroeconomics, interest rate, gross domestic product. We're talking about import and export, things that affect the growth of of a country, that affect the economy of the country. A country where there is war, the state of the economy will be kind of bad. It will be bad. It's not even kind of. It will be bad when there is war. The economy of the country will be in a drawback. So in a country where they are importing most of all they use, compared to a country that they are exporting outside, you can't compare the economy of the two. One is bringing money inside the country, while one is spending outside of the country. So these are the things we'll be talking about in this video. So to start, let's talk about technical analysis more. When we're talking about technical analysis, we are going to be using our chart majorly. Pure price action. We are going to be using pure price action. The action of price based on major trends. Imagine this kind of trade now. Okay, I'm on a trade now. Let's come to the monthly. Let's come to the monthly. This is a level in the market. These are levels. You can see price came here, came down to this level, then went back to this level. This level is the same as this level. These are the part of the stuff we're talking about in technical analysis. This one has happened before. Let me try and put it. This part has happened before. So it happened before, then price, what's happening to this? Oh God. Then price decided to come back to the level again. Price came here, then came back to that level again. These are part of what we'll be discussing in what we'll be learning in technical analysis. Because technical analysis is analyzing your chart based on past trend to figure out what is going to predict what is going to happen again. So before we go into that, let's learn about candlestick. What's the structure of a candlestick? This is a typical bullish candlestick, and this is a typical um, bearish candlestick. When a candlestick is bullish, it opens at the bottom and it closes at the top. But for a bearish candlestick, it opens at the top and closes at the bottom. That means it is coming down. When it opens at the top, it comes down to the bottom and closes there. That means it came down. But for an uptrend, a bullish candlestick, it opens at the bottom and closes at the top. So when we are labeling our candlestick, we'll be labeling the wick. This is the high wick. This is the low. This is the low wick. Then will be this is the high of a bearish candlestick. This is the low of a bearish candlestick. We can call the wick also shadow. Okay, let me check through my notes what I'm teaching again. So now let's go to the key levels when it comes to technical analysis. Let me open a new chart to make it easier, because I've analyzed this chart before and I'm in a trade. Okay. Let me open GBP USD. This is a plain chart, and let's come to the weekly time frame. Let's come to the weekly time frame. Now we are going to analyze the levels in this market. Look at my drawing well. Now, on the 18th of April, on the 16th of April, from 9th of April to 16th of April, market came back to 1.43206. Now, the market pushes it down and it came back to this level, 1.4, that same level we marked the other time. This has happened before. Price came down. It's now back to this level again. Now, if you notice, price has been notice now price moved from this level to this level, this A, this B. Then from B, it came back to A, where we were before. Let's make this one C. From that place, it moved back here to this level. Now, we're expecting price to actually come back here, because let's draw the levels here. Now, this is another level I'll mark here, because price came here, draw down, came back here, draw down here. Now I'm back to that level, draw down to this level again. With force, we were thinking that it will break through it, but it didn't. It came back here, retested it, Then to that same level here, this one happened 18th March. This one 23rd December. Then this one also September 2020. This one is 2019. October 2019. This 2020. So we are talking about technical analysis, analyzing trend, analyzing the market based on uh previous price occurrence. So we are expecting, okay, if this, now this is a level we've marked there before. Now price got to this level, retraced, moved up. Now this one is drawing the price back down. It came to this level, we've marked this level from this side. It came to this level, price came to this level, couldn't break it, came up, but now the price is so determined on coming down. Now it broke it here. Look at this gap, it broke it here. Now it's retested it. What we are looking for now, we are expecting price to come down here. We're expecting price to come down. Analyzing this, we're expecting price to come down. Though there are a lot of happenings. This is a weekly chart. There are a lot of stuff, a lot of things that will happen within that time frame, and anything can happen in the market when you come down to the daily time frame. You will see this a bigger time frame to analyze the whole concept, the whole direction of the market. But when it comes to smaller time frame, you can see the little trend. This brings the bigger trend. But we can see the simple trend. The market is moving for our entry and other things. Now, let's come to trends. What are the different types of trend we have when it comes to the forex market? We have the uptrend and the downtrend. When we are talking about uptrend, market comes up, comes down to this level. Market moves up, comes down, now this is an uptrend. This is an uptrend. How do we define an uptrend? Let me download. How do we define an uptrend? We define an uptrend. An uptrend has a higher high and higher low. This, let me write it here. Higher high. Higher low. Now this higher high, market move from this point to this point. This is a low. It formed a low here. You get what I'm saying? It formed a low here. Then come here to form a high. Now you can see that this low is higher than this low. That's why you say higher low. Now this high is higher than this high. This high is higher than this high. That's why we call it higher high, higher high. This is another low. This is another low. It's higher than this low. This is another high. This is another high. It's higher than this high. Now, if this happens, this is an uptrend. Now we'll be going back to the chart to explain, to show us some example of an uptrend. Now let's come to downtrend. Let's come to downtrend. Sorry about that. I want to make sure it's on this line. Let me. This is an example of a downtrend. This is a lower high. Let me label it. Lower high. I couldn't draw it perfectly, but this is a lower low. Let's now this is another lower high. This high is higher than this. This is another lower high, and this another lower low. Lower low here. Same as this is lower high. This is another lower low here. Then it forms another one. So that is different between an uptrend, an uptrend, an uptrend here. This is an uptrend here. Why we should have shown how a downtrend is. Let's go to our chart to see the examples of an uptrend. Let me go to 4 hours chart here. Let me remove the uptrend. Now let's see this. This is a high here. This is a okay. Now a new trend started here. Then let's analyze it to this stage. This is a lower high. This is a lower low here. Let me change the color. Make it deeper. Now it formed another lower high here. Then another lower low here. Another lower high here. Another lower low here. Lower high here. Though we can't, I shouldn't do it to this level because probably there may be a change. There may be a change in the market's direction. But let's look at an example of an uptrend. Let's come to seems okay. Seems our fun. Let me use this. I think this is better. Now, from this level here, higher low, higher high, 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 higher low, higher high. Now, it moved from this level to this level by forming higher lows, higher high. Do you get that explanation now? So, let's go to a very popular that you must know when it comes to analyzing, when it comes to technical analysis. Key levels, support and resistance levels. I'm going to explain that briefly. I will be creating another video on it. I'll be explaining support and resistance levels briefly. Now, when it comes to support and resistance are key levels that markets take turns. Let's look at an example. Markets move from this level to this support. Wouldn't break it. Okay, let me make support. Let me make it color red. Now it came down to this support, couldn't break this support. Now this support, price take turn from this support, then moved up here. Now price moved from this support, couldn't break this support here, moved up, then came to this place. This is a resistance. Get what I'm saying here? This is a resistance. This is a resistance level. Because price came to this level, price came down. Let's see it. Price came down. It couldn't break this. I didn't mean price broke this level up like this, like this. It will retest it, then go back up. But price couldn't break it. You get that? Price couldn't break it. That makes it a very strong resistance level. Price came down. Price came down, but this time around with full force, it broke this support level. When it came here, couldn't break it at first. It went up to gather momentum, but that momentum was not enough. Came up, but see this price gap, it still went up again. But this time with full force again, came back to retest this level. Now it broke it with a very full momentum here. Came back to that level to retest it. Now price started coming down to form another new support. Another new support here. Let me change it to green. Green. Not to red. So form another new support. See, form another new support here, went up, came down to form a resistance level here. Let me make that green. Now see the market. Market is this is a support. Now what are we? Okay, wow. Actually, this I'm using a live market though. Now, what are we expecting price to do? We're expecting price to come to this level. This is a resistance level. We're expecting price to come to this level. Funnily, I'm in this trade right now. We're expecting price to come to this level. If it can come down a little, come down a little back, then break it now to our major resistance. This is what we are expecting. So let me go to the weekly to explain support and resistance better. Let me go to make to do another example of support and resistance. Let me remove all drawings. Price comes to this level, come back here, go up here, come back here, go up here, Imagine this now. Here we have a support here. Price move from this support to form, but couldn't break this resistance level. Couldn't break this resistance level here. So it came down to form another support. Now moved up, but broke this resistance level. You know this, to break this to break it. Now it has broken this resistance level. Probably it came down a little bit, or okay, it retested it, then break it. Well, but now this place we turn to the new support. Now this is a new resistance. Now price came back here, broke it here. Now this one we turn to resistance. You get price move from this resistance into this support, come to this support. This one will turn to support level. This one will turn to resistance. So now when the market is trending, or when there is a change of direction, a support will turn to resistance level, while a resistance level will actually turn to a support level. So in technical analysis, you see people using different indicators, pivot points, moving averages, Bollinger Bands, and all like that. So I don't use most of them because most of them are lagging indicators, moving averages, Bollinger Bands. Most of them are lagging indicators. The only indicator I use is Fibonacci. I use Fibonacci. I use Fibonacci to this Fibonacci retracement. I use it to know where maybe a market is trending up. I know if the level it will probably come back to, for me to find an entry, then trade it up. So that's all about that. To complete this video, let me briefly explain uh, things you need to know also about fundamental analysis. Now, when it comes about fundamental analysis, yeah, you are trading news. You are trading news, and big banks, people that have big money, those are the people that control the institutions. They are the ones that controls the market because they have big money to put in the market. They control the direction of the market. So most of what they trade is big banks actually do trade fundamentally. Yeah, they trade for using fundamental analysis. That's why also sometimes if you check what could affect the market, latest news that could affect the market, maybe you check Fox News, Bloomberg, and all like that. If you don't have time, I use Forex Factory. You can check investing.com. This Forex Factory, these are today news. Now they release the news 12:50 a.m. Okay, this Canadian dollars news that I checked today. And when news happen, you will notice there will be when news happen, you will notice there could be a very quick change in direction, maybe very quick candle just coming down. These are stuffs you could see in market. It happens all the time. So let me come back to, okay, let me see what the market is doing. Okay. Okay, I couldn't enter this now. I know this a level. I know that I've marked. I marked this blue space on a bigger time frame. But this another level is from on 15 on 4 hours time frame. This line, but I expect the market to form a an uptrend. So we move from this higher low to this higher high. Now I couldn't. I was okay. I've marked this level for market to drop down, but I couldn't. I couldn't take the breakouts here. I was not. I was not on seat. I was not checking my chart. But I know that market will form another higher high, then come back to form another higher low. Now, when market wanted to form the higher low, I know the higher low will probably come to retest this breakout level. So I already put I was on seat. It was not a limit order. So immediately it came down to this level, I entered the trade. This is my target level. Also, this GEP USD, this GEP AUD. GEP AUD, I was so confident about this level that market is not coming down to break it. So I already marked my entry. Immediately market entered this level, I believe it's coming up. Now it's forming, this is a higher low. It just formed an higher high. It's coming to retrace it back to this level. Then now I'm expecting market to shoot to this level at least. If it comes up, I'm expecting it to shoot to this level. Okay, I've marked my actually there are different, maybe in my next video I will explain analyzing chart based on market sessions, because I do trade based on session, though I'm in Nigeria, and actually I analyze my I wake up by 6 a.m. or 6:30 or sometimes 7 a.m. Then add my seats, analyze my chart within that time. Now I mark this level and market is kind of struggling to break it. I know it will probably come down, then shoot up. So before they close by 4 p.m., let's see where the market could drive it to. Because by 5 p.m., I'm already out of trade 5 p.m. I sell some cases that I know, okay, it's my market could enter Asian session by 12 a.m. opening, to enter the opening of Asia session another day. Then I'll see what what Asian session want to form. The higher low, the higher high want to form. So that's it. Okay, metal price will come to this swing. Come here, come here. So this will be the end of the video. I've explained fundamental analysis, technical analysis. So I won't have time to edit this video though. So I will publishing it directly like this. Let's see gold. Though gold, I entered gold at this level yesterday. I took profit at this level. So I was expecting price to actually break it. I was expecting price to break it here. Now it retested it, but I was not on seat. I was not able to monitor the market. But I know it's coming back to this level now. Okay, I'm expecting it to break this level because I should have entered it when I saw this massive bullish candle. Because to me, based on my own style of trading, this is when when I saw this massive bullish candle and the opening of the New York session, we formed this candle here. We tested it up a little bit, and now it's coming down. I can enter the market now. Let's see where it drives it to. I'm expecting the market to drive it here. Though these are some of the stuff I'm expecting market to do. Now USD card, I'm expecting USD card to come here. Now when it comes here, I'm expecting USD CAD to push up to this level, to this level. So yeah, I'm in profit in GBP USD. I'm in profit in GBP AUD. Cool cash, cool cash. No, just dedicate time to learning, dedicate time to checking your chart. Now, to be successful when it comes to forex market, all you have to do is know the convenient time for you. Now, market is very volatile in the London session and New York session. Now, if you're in Nigeria, Asian session, Asian opening, you must have been sleeping. So you'll be sleeping. So focus on London session and New York session. Take your trade. Take the market so serious. I take the market as a full time job. To me, like a full-time job, because unlike before, I quit most of what I'm doing because I'm a very good I'm a web developer. I quit everything because I just love forex market. So now all just need to have is a good phone with good internet connection. I, now don't displace the place of mentorship. Also, you can opt in for a mentorship program. Learn market structure, learn position sizing, learn risk management. Risk management. If you want to be successful in this market, you have to be very good at managing risk, because not every day is a bonus day. There will be the days you lose. There will be the days you make a lot of money. So the most important thing is know when to cut your loss short and know when to ride your profit. So cheers. Expect to get more videos from me. And yeah, subscribe to my channel. If you have any topic, any part of market you're finding difficult to understand, you can comment below. Um, if it's part of my strategy, I can explain it. Also, I'll be dropping my mail in the description of this video. If you have anything you want to contact me about, what you want me to teach about, and advice and all, I'm excited to grow this channel more. So I'll post my Instagram page, our Instagram page, Uptips, and soon when we get people to follow us more, we are planning to build a website, let people come together, let's form a community, let people learn from each other. So yeah, this will be the end of this video. Like, subscribe. See you next time. Bye.